Hello guys, Steven Ducks here. Welcome to this video. Today I will be reviewing all of the mistakes and some of the biggest losses that I made in 2020. And this is something that I regularly do yearly. So I will be able to identify which one is avoidable losses, which one is unavoidable. This is a very important steps for me to become a consistent profitable trader. So I think it's also important to you as well. And before I start this video, make sure to click the like button and subscribe, and let's get into the video. So the overall process will be split in 3 different parts. The first part will be all of the losses and the mistakes you made. Second part will be all of the consistent winning trades that you made throughout the year. The third part, which is the most important part for beginners, is you want to select all of the trades that belong to scalping or small trades. You made about $500 or $1,000, and these are considered to be small trades for your account. Now you want to identify them. Does these small trades fit any type of pattern? Now, if it's not fitting any type of pattern or some of the pattern you want to potentially test, then those trades count as you are over trading in this market. So once you can filter that out as a beginner, then it will be a very good step for you to become a consistent profitable trader. In this video, I will be going over all of the mistakes that I made. Some of the trades that stands out and I'm very stubborn about, and size being way too much, and also some of the biggest wins that I made throughout the year. So you can kind of see that how do I really react if I'm winning big or I'm taking a huge losses. So in this way, you can get used to the mindset that you are winning, and also if you are losing, you'll be able to find out, okay, this is something that I did before. I will try to avoid it into the next time when I'm trading in real time. So that'll be all of the concept I want to give you guys. Let's get into the recaps. All right, so there's going to be 2 tickers I want to talk about. OBON, this one will be, I would say, one of the biggest mistakes that I made. I caught losses way too late. Let's look at the yearly chart. This ticker had over 200 million resistance around $2 to $3. The major consolidation area is between 2.5 to 2.7 in that day. When I talk about shorting into resistance, I always avoid stocks under $3. So on OBON, it's stuck between $2 to $3. It's on the high 2s and the low 3 area. So it barely qualified the criteria of shorting into resistance, which I still sized in full amount, risking the $3 area. I think the stock opened over 3, opened around 3.4. It traded about 100 million shares before 10:30. If you are trying to estimate the entire day volume, if in the first hour already traded about 100 million shares, it's definitely going to trade more shares throughout the day, and it's also going to overwhelm the 200 million resistance that was made in December 7th. In 2018, 2019, we never get any resistance that is close to 200 million resistance. So I sized in about, I would say, 500,000 worth of positions. I think I took around 15%, 20% losses. So that's like 100,000, 150,000 losses on this specific ticker. So in the future, what I can improve on is if the stock is trading over 100 million shares before 10:30, and it's definitely going to trade more than 200 million shares throughout the day, and I will try to size down, because sometimes the stock decides to do a massive pull and actually consolidate around the resistance, then drop. So in that case, if the volume is too much, try to size down as much as possible. I would recommend 20% of your regular size for this type of shorting strategy. So for WNW, this is another massive win that I did. I was very patient on this ticker because during that time, there's a massive IPO hype in that 2 months. So the stock did win very overextended, went from 7 to 160 in 3 days. Let's look at the intraday chart, so we'll be able to tell where the entry is and where is the exit. So first of all, when the stock is spiking in the afternoon, there's always a really good chance that stock tends to perform a massive morning spike. So for WNW, because it is a very fresh chart and it attracted a lot more volume after the open, the stock went from $50 to 160 pretty much in 30 minutes. Once it formed the top, it dropped another 50% from the 160, so it dropped all the way to $80. So in this case, when people are buying around 160, they're down way too much. So they want to sell into some type of consolidations or bounces. And it consolidated about 2 million shares around 100. So that's about 2 billion in terms of dollar block, which I decided sizing around 120, covered around 102. Then because of the borrow fee was way too expensive to hold overnight, I sized in again into the next day morning. Average is around 103, covered on the low of the day, close to 72, 73. So that's the two trades that I made on WNW. Both of the trades I made over 20% from my original investment. So I think that's a decent gain. And also one thing to keep in mind that a multi-day runner tends to fade anywhere between 50% to 75%. Now 80% of the multi-day runner tends to only fade about 50%. Now the rest of the 25% doesn't really happen that often. So for WNW specifically, it covered when the stock faded around 50%. But in some cases, that this type of tickers tends to fade 75, which you can see that when it dropped it to the low 30s, that's in total about 75% of the entire gain. OBLN is one of the biggest losses that I made in 2020, and also WNW is one of the biggest gain that I made last year. Hopefully you guys can learn something new about my thought process on OBLN and WNW. Overall, I think the market is going into a bigger volume sector. So what you have to do is go look at your losses and to see what you can improve on, and also look at your wins to make sure that what you can do to keep your consistency. So that will be all for this video. Thank you very much for watching. I will see you guys in the next one.